Good morning, everybody. It's Friday again, and after we skipped last week's Satoshi Secrets, it's high time we do that again. Welcome,
Yes.
wherever
Welcome,
in the
everyone.
world you are. So maybe it's happy lunchtime or good night or supper time for you. And as always, I welcome here with me Jonathan from Sweden. How are you doing, man?
I am good, thank you, Dirk. We're also
Yeah.
live on my channel here, so I think we're on
Nice.
your channel, and then we're on my channel as well. So we're doing a
So
restream.
we're
here. It's
basically
pretty-
everywhere, guys. You cannot escape us.
We're everywhere.
Like,
That's
you
right.
might as well stay. You might as well give us a like, give us a comment, because there's just no escaping us for the next 45 minutes to 1 hour.
That's right.
Yeah, like I said
Remember
last
to-
week, had to skip sadly because I was setting up my new office, and as things always are, you know, they are not running as smoothly as I would have wished, especially when it comes to the internet connection. But seems like that one worked out quite nice. How it's going to stay stable. Still a little time until I get fiber optics installed here, but yeah, seems to be just nice. By the way, I think in the background looks pretty much the same like my old office, so I didn't change much.
It does. I was going to say that. I can't really see a difference.
Well, except those, where is it here? Those nice orange, like what is that? Like sound echo absorbers.
Yeah,
but
that's new.
apart from that,
That's
you know,
pretty good.
never change a winning setup. Same as in
Exactly.
trading.
Exactly.
Yeah, it has been quite
this.
an interesting, 2 weeks, I have to say, with to the upside, then again to the downside. I think at the moment, safe to say that markets are a bit in a phase where they are very influenced by geopolitical tensions. So looking obviously at the conflict between the hopefully not escalating conflict between the Iran and Israel. Then we got NFPs today, this afternoon. The whole financial world is going to look at that. We can discuss a little bit about this later. This, of course, is going to become important then again if the Fed is going to continue cutting rates this week. And I think we've seen a lot of interesting stuff in price action on especially Bitcoin, seen very interesting developments also, my opinion, on my personal trading system. So later on, I want to go into the latest results there and how I deal with them in terms of risk management. And yeah, then maybe, by the way, did you hear the news this morning, Jonathan? HBO is going to bring out a new series, and supposedly they discovered who Satoshi is. But we're not going to tell you. For that, you need to have a subscription, obviously.
Yeah, of course. Is it? I mean, I guess. Okay, HBO. Well, I mean, now I have to watch it. If they say something like that, I mean, I have to watch it. Now we can assume that it's you know, they haven't come up with any real proof of who it actually was or is. I mean, when I think about it, I think, you know, the person closest to Satoshi was probably Hal, right? I think that's definitely one of the persons who were closest to Satoshi. And then we have like, it would be funny if they say like Craig Wright, if they come up with that documentary and it's like, oh, it's Craig Wright. That would be amazing.
That would be the most ironic twist in crypto history, really.
That would be pretty fun.
Well, let's just hope for our sake that this is not going to happen. But I mean, if it is, we have to look into maybe the series was produced by Craig White as well.
Yeah. And we probably shouldn't mention him because he's probably going to sue us. Like he's just going around suing everyone that says he's not Satoshi. That's
I know, but I think he ran out of money. Well, I didn't say that.
Yeah, exactly. You didn't say that.
Yeah. All right. I mean, let's quickly have a look here at the latest stats for Bitcoin, and we had actually the most green September in all of history since 2013. Why since 2013? Because before that, price measurement was a bit difficult for Bitcoin because you didn't have a lot of exchanges that worked properly already. So since 2013, September this year plus 7.3%, which is actually amazing because normally September is the worst performing month for Bitcoin. However, now we set a new record plus 7.2%. And what you cannot see for that, I maybe have to do like this, is that normally here October with an average of plus 20.7% and especially November plus 46.7% are normally the months that are the best for Bitcoin. for the performance. And of course, we could play games now. What would happen if we just see the average performance? That would put the price of Bitcoin, I think, to mid-80s by end of October, and then to 150 or cannot be 120 or something for November. It's probably not going to happen. Guys know I'm very optimistic, of course, but we have a couple of obstacles to overcome, in my opinion. First, the first one, if you don't mind me just starting here right away, Jonathan, is that we need to overcome this weird structure that we are still trading in. And by the looks of it, again, we made a lower high here again. So this it's not really a mini bear market anymore. It's been going on now since February already. So we're talking here about 8 months now that it has been going on. We are still in the structure of lower highs, lower lows. Well, of course, technically speaking, you could also say that this structure here, especially the last ones here, is like a double bottom. For me, important to really see like a dynamic move to the upside. The one that I'm expecting starting either somewhere, between late October and mid of February 2025 would be now short term, in my opinion, at least, that we recapture here really this bull market support band. So the yellow line and the red line here, you can see we struggled to really move over it when we had this event with the somewhat escalating conflict between Israel and Iran. Of course, that put pressure on the price again. However, what I like to see is now, and we can see the wicks down here with the latest price movement, that it seems, at least for the moment, that kind of the 60,000 seems like a place where Bitcoin is defending quite well. So that makes me slightly optimistic. However, really bear in mind, markets like these are, from my experience, and I've seen a couple of those conflicts in my lifetime already, that didn't luckily really escalate. Well, maybe with the exception of the Iraq war, the first and second one, but that prices on actually any asset class, you can see the same reaction on stocks. You can see this on bonds, on gold, on oil, of course, especially as well. They react extremely shoppy. So whenever there's just a rumor coming out now, whenever there's some slightly bad news, especially bad news coming out, the markets will heavily react to the downside when we're talking about risk on assets. So be a little bit careful at the moment. Could be, and actually I think those are, especially if we should go lower and test those lows here around, what was that, $54,000 again. My opinion, still great opportunities to buy. I don't see us really at the moment necessarily going down there, with the exception, and that's the big question mark at the moment, in my opinion, any time could be coming news out that, I don't know, one country is bombing the other, escalating conflict. And we're talking here about, of course, 2 countries with supposedly nuclear weapons. I don't know about Iran. Not sure if they have. I know they have like a nuclear power program. Don't know if they weaponized their plutonium there. But of course, this is like something that could escalate quickly in a way that nobody of us is expecting. Should we take this into account as traders? Yes, we should, when it comes to maybe reducing, if we are day trading or swing trading, maybe be a little bit more careful on the size of your position. Don't use as much leverage. I'm not that big a fan of leverage anyways, you guys know. Long term, I don't think it's really going to make a difference. It's only going to make a difference if like things really escalate and we're talking about something like World War III or something. But then on the other hand, it doesn't really matter when you invest it, because everything is going to zero basically, or almost zero. I'm not going to say exciting times, interesting times, difficult times to navigate. I want to hand over to you now first to hear your opinion on that, Jonathan. Later, I want to show you also like what effects something like this choppy markets where like every day is a little bit different from the next day, and where everything depends highly on news, what that actually can also do to very static trading systems that are not so much able to adapt to a situation like this. But I want to hand over to you first. Have you shared your screen already? No, you haven't.
No, I have not. I will I will do that right away. So yeah, you brought up some interesting points there. I think one thing I did was actually I went back to when I believed that the Iraq War started, what's around March 2003, I believe. Right, that was the.
I still remember this because the day after that I went to a concert of the Red Hot Chili Peppers.
All right. So I looked at S&P 500, and from the peak right here to that bottom, that's a 6% down move on the S&P 500. Now I can't find. Now this is obviously on Oanda, and weirdly enough, Oanda price action actually starts at when the Iraq War began. So I don't know what price action looks before this, but the official start date would be around 20th of March or something like that. And it dropped 6%, but then it actually started recovering just days after. So about 10 days after, it started recovering, which I do see this happen quite often. Even if you do have a black swan event or whatever, the stock market almost always recovers rather quickly. 10 days is not a lot of time if you look at the long term. So I wanted to also compare current price action on the S&P 500 with Bitcoin. I think that's a healthy thing to do. You're looking at two major risk on assets, and if we're looking at S&P 500 here on the weekly perspective, and I think looking at it from a weekly perspective is important when we talk about indexes or indices like this one and Bitcoin, because we're not looking at this to, we're not going to make money on this short term. We're looking at this long term, and I believe that's the best way to look at these markets. And if we look at the S&P 500, we broke into all-time highs territories. And for me, all-time high is not just when it's a price that never been printed before. It's an area, right? So I see, you have the resistance right here. Now this resistance here, and when the S&P 500 broke above this, we broke into all-time highs, printed new prices that never been seen before, but we're still above this resistance. So I would still view the S&P 500 as trading in all-time high territory, like breaking new ground, if you will, and creating new structure
crypto has
in an
for
area
sure been more affected. By the way, just what I noticed here on your chart, I mean, look at that pin bar that formed a couple of weeks ago. That's like insane price action. I didn't see that at that time, actually.
Yeah, it's insane. It's straight down into a support area, and then prints the most beautiful weekly pin bar, and we never come down. We go from that into all-time high, which is pretty cool. But now you're looking at this on a weekly, and we can go down to the daily. This is very healthy price action, and to see this from the fact that Iran attacked Israel, and it's not they didn't attack Israel as they did last time, and they said like, hey guys, we're gonna send drones, and they did, and there was like no damage. This time around it was an actual, I'm no expert at this, and I haven't really done any research on this. All I know is from sources from news websites and especially financial news websites like Bloomberg and things like that, which I do follow regularly. I do look at like Bloomberg Live to get a update on what's going on. But anyway, so the attack that Iran did now was more of an actual attack, and the reaction that we saw from the market is not really massive. Now, I think also the response from Israel is going to be very important. I mean, I know that the UK and the US went down and said we're not gonna join you if you decide to we're not going to join you in a counterattack, and we advise not to do a counterattack, basically, because that would escalate the situation to a whole nother level. I mean, Iran's been fighting with proxies. Right now we're talking about an actual full-scale thing going on here, and hopefully that won't happen. If that happens, we're probably going to see this level break, right? And if this level breaks, then we're back below this all-time high region, which means we're back into a potential risk of scenario. But looking at the daily, I mean, this is the level. I mean, I would just put a level on it. This is the level that needs to break for the S&P 500 to go into more of a bearish territory. But it's from a weekly perspective, what I'm watching is really this level below. So we have from the top down here a 9% move to the downside for the S&P 500 before we enter what I believe a truly bearish market structure on the weekly, which means that's twice as much of a drop from the Iraq war. Okay, so to put that into perspective, there needs to be a very serious escalation of this conflict. And you talked about nuclear. Now, we don't know. Like, we obviously don't know if Iran has nuclear or Israel has nuclear. Like, there is, people believe that Israel might have nuclear weapons, but they haven't gone out officially to confirm that. Iran is believed not to have nuclear weapons, but they do have a program, and we don't really like. Probably not. Probably Iran doesn't have it. But if we have new technology and things like that, so it can be things are moving quickly. So we never know. But right now, it doesn't look like there's any issues with the risk assets. People, I saw on Twitter yesterday, like, people saying like, "Oh, it's super. Bitcoin is bearish. Like, we're going into the bear market again. Why did you post about that pump?" But then I looked at Bitcoin. I'm like, okay, where's the bearish price action? I'm looking at this and I'm saying, wow, that's a really good, healthy retest of a breakout level and a support level. And, we can add the fibs from that low, the low of the breakout move, to the high of the breakout move. And what we get is just the most beautiful, let's see, this one right here, like right down into the reload zone, right into that 0.618. This is really, really good level for Bitcoin to retest. And
the structure is actually the same that you like it was 2 weeks ago, I think, when we did the last live stream. Yeah, you were also talking about almost exactly the same reload zone, and we are there again.
Yeah, so I mean, it's the same level that we've been watching for a couple of weeks now, since I believe we started talking about this since the beginning of September. So almost a month now. Well, actually, almost exactly a month since we started talking about this, and now we're getting that breakout and we're getting the retest. So I have a long setup forming here on Bitcoin. So let me explain how I would go about and execute this trade. So the first thing I do is I mark out high time frame level, which is usually daily levels, which I have here on the daily. Now, it's not perfect, but I don't really care. It's just an area, right? And then when price comes down into that area, price is now in the area of interest, right? So in the area of interest means basically inside that high time frame support. So now it's time to go into the 4 hour. So I'm only looking at the daily and the 4 hour in this scenario. And what we have here is price clearly using this level as support, but I need some extra confirmation. So what I want to see is for example, this candle right here. It's going to close in 3 hours and 40 minutes. If this candle can break above like this and maybe close like this, then I will look to go long here like that, or maybe all the way below the level, because that would then confirm that we now have a rounded structure with price action, and this is what you see when price comes down into high time frame support. Most likely it forms some type of breakout structure or bottom formation. You can just look at this level right here. Now, we came down, we hit that high time frame level, and then we started printing a bottom formation right here. And what I would have done here is, when you had that thrust candle right here, let me zoom in so you can see clearly. When we had this candle closing up here, or perhaps that one, I would enter orders like this. So that's the neckline of the bottom formation. And then this kind of confirms that we're above that level. We have a good breakout right here, and I would probably enter orders for this one. And you see that this structure is very clear in all markets where you have some type of downtrend. I'm just going to go down here. So you have some type of downtrend, and then at the end of this downtrend on the 4 hour, like you have downtrend on the 4 hour coming into high time frame level, and then you start forming breakout market structure. So if you have a good understanding of market structure, it's going to be very easy for you to spot these scenarios. The same thing goes on, on the other side as well, when you have a break and retest. So here you have an uptrend coming into, let's just say that this is, I'm just going to make it easy for myself. And then you have a downtrend. And here you start forming a bottom formation. And what I'm looking for is basically this. So market structure is going to look very different, right? And you can see right here, it's quite messy. But what you can see is this bottom and this bottom has a similar characteristics, and that is the break and retest of this level and a potential break and retest of this level. So I think trading is actually quite simple, if you know what to look for. And one of the most simplest thing to keep an eye out for is a shift in market structure, because if you know if you're good at identifying the highs and the lows, then you'll also be good at identifying the breaks of the highs and the lows, and that is a good indication of when to enter trade. So looking at Bitcoin right here, there's no reason to worry. And I would say you talked about a potential bear market or a downtrend, and I think I would agree with you, because I think on the weekly here, within this trend or range, there is a very clear structure above here, which shows us that whenever price tries to get higher, it gets bought down without reaching new highs. So, buyers got stopped here, and then sellers came in a bit lower, and then new sellers came in lower, and this time even lower. We did break above this one right here, but I think this is more, these rejections are just more obvious. On the downside, however, I do not view this as lower lows. So now this becomes sort of I can't remember what this pattern is, but it looks like actually it's quite nice. This is let me see if I can. It's not a flag. It's is it a wedge? But we have, I can't remember. That's a bit embarrassing. I can't remember what it is. But usually what you have is you have a move up like this, hits the trend line, and then down to support like this. And it's I have to look that up. I have to look that up actually. What this pattern is called. But yeah, I think that's what I'm looking at, and it has the bullish characteristics, because you have equal. I would view this as equal lows actually, because you have that down move up, and it forms perfectly what I would be looking for on this pattern.
Yeah, I'm thinking also what the pattern is called. I also don't know.
Yeah, I'm trying to remember, because I know exactly what this pattern is. It can be okay. So if you look at only this is a descending. Could be a descending triangle. It's not a wedge, because a wedge obviously looks like this.
Yeah.
But the fact that we have this move into the descending triangle makes it something else, and I can't remember.
You can view it as a wedge, maybe like very long term, because you also got like a flat bottom and the top slowly coming down, so eventually they are going to hit somewhere,
Yeah, but there's the pattern is because it's on the higher time frames. There's one word for this pattern when it's on the higher time frames, and one word for it when it's on the.
It's going to keep you busy.
Lower time frames.
It's going to give you.
You know what? Give me a second. Oh man, I got stuck in my shirt.
Oh no, he got stuck in his shirt. So while Jonathan is maybe looking.
While I look this up in this book right here, I will look it up.
In the meantime, while you look that up, I want to quickly switch here back. Because again, I think in times like this, always important to keep an eye on the grand scheme of things. And if you look here at, you guys know, this is one of my favorite long-term charts, the Bitcoin logarithmic regression together with the MVRV Z score, which has come down, so this is still far from topping out. Topping out would be somewhere, if we take into account diminishing returns, maybe somewhere between 5 and 6. We are still far away from that. And I've been saying this, I think, on almost every live stream now for a couple of months already. For me, what is important are these patterns. How long did it take after the last halvings to break out of his green channel? Because this indicates the start of a super bull market. This was somewhere, we look back 2016, slightly 300 days. I think it was a bit long here, around 180 days in 2020 after the last halving, after the COVID halving, I like to call it. And this is why I said probably end of October earliest, because 180 days from the halving would put us here somewhere around October 25th. If we take the long route, and of course, this is also possible with all the talks about recession, with, geopolitical tensions. This would put us in February of 2025. Still, of course, in very exciting times, because not only this is going to put this 4-year cycle again to the test, and I can very well remember after the last halvings, we had discussions like this that you see on social media. This time is going to be different. COVID is basically has messed up the whole cycle. We're never going to recover from this anymore. Well, and we did. Of course, the last halving, maybe the all-time high was a little bit disappointed. A lot of people, including myself, obviously expected 100,000 there as a target. But it's like whenever we see like a bit of depression in the markets in terms of, this is it now, cannot go higher. There's a recession coming up in the USA. There is an escalating conflict. These were usually really the times where you need to buy. So when the blood is on the street, and it's not even on the street. I mean, we're looking at a fear and greed index, which is at 41 this morning. So in the more FUD territory, not quite, but in the fearish, let's call it like this, territory. And we have a price of $61,500 US. I mean, that alone. Or did you find the pattern? Or?
No, I did not. But yeah, I definitely agree with you. It's quite crazy to have. What I'm going to do is I'm going to see if I can do a Google search for the actual image. That would be pretty cool if I can just copy paste this, and then we'll see.
Or just ask ChatGPT.
Yep. Okay. Let's see.
So let's see. Does any before Jonathan finds it? Does any of you guys know what this pattern is called? You can.
Okay, so this is a descending triangle, but there's.
So it is a descending triangle.
Yeah, but descending triangles are
bullish, no?
Descending yeah. So this it depends on previous price action. So descending triangles are bullish as a continuation. This is a continuation pattern. It is supposed to be a. It is usually a bearish continuation pattern, if I'm not mistaken. So you can see it like this. It can move like this. And then you're going to get the breakdown like that. So in that case, it would be a bearish continuation pattern. So I'm not sure how valid it is as a bullish continuation where you have previous price action being bullish. But I know also that a descending triangle is usually on the lower time frames. And if it's on the higher time frames, then it's usually called something else. So I can't believe that I don't know this today. Like I've studied this.
Honestly, years. Between you and me and you guys out there, it's nothing I really look at very much.
Me neither.
Honestly, I like that's why I said it earlier, something like a double top, double bottom, lower highs, lower lows, because this is always like the day-to-day business, to identify the current market structure we are in. But like I think forecasting what is going to happen because of geometrical patterns, I'm not so sure if that is really going to help you long term,
Well, there is some statistical advantages of using certain patterns. Like I've seen that when they're tried when they tried. We got one in the comments saying it's called a macro descending triangle. No, that's not it. That's not it.
Macro descending triangle sounds also nice. Yeah.
So a descending and ascending triangles are usually used on the lower time frames, but when you have a more of a high time frames, it's called something else. But whatever. I'm gonna look that up. But right now I'm looking at the Bitcoin here, and also when we talk about descending triangles and patterns, like I said, they have done a lot of research into looking at the actual probabilities and the win rates of using certain patterns, and there is an edge in using patterns and things like that. But this just goes to show that you can trade with whatever. But what I'm saying is, if you know market structure, then you don't need any type of patterns, because you will be able to know, if I see, for example, if I see this, so we have, let's see, we have an uptrend here, like this, and then price does something like this, then I know that this is a reversal, and I don't need to understand that this is a head and shoulders pattern. Okay, like I don't need to know that this is head and shoulders to understand that this is a breakup structure. Now, knowing what a head and shoulders looks like is good, but it's much better to just understand that when is there a breakup structure, because the breakup structure might look like this as well. Like you never know what price action is going to do, and it might look like this as well. It's not a head and shoulders, but it's exactly the same type of a break-in structure. So it might look like this as well. Like you never know, right? But still, this is the same type of break-in structure as a head and shoulders. And same thing when you have, like, if you have a downtrend and you start moving like this, like you still know that that's a good continuation trade, and you don't have to know that this is also a descending triangle with that one right there. All you have to know is, okay, we got support, break, and retest. And how do you trade a descending triangle? As you either buy on the breakout, but most people buy the retest, and then you put stops above the last high pre-break, and then you're looking for, usually what you want to do is you want to look for the same move that came into the triangle. So the first move that went into the triangle, which is that one, and then you will look for that move to the downside. So if you want to trade it like the official way, you want to have, like, that's going to be the setup. And you'll be able to know these setups and understand these setups with only knowing market structure. So all the patterns out there is it's just names for market structure and break of market structure, basically. I wonder if you have a pattern here on Bitcoin. I don't think we have a certain pattern, but the possible break of structure here is very clear on Bitcoin. So yeah, I think we're going to see a move to the upside. We do, however, have NFP today.
Yeah, that's going to be quite a biggie. Actually, I think on Wednesday we had the jolt job openings already. Was always give quite a nice indication. Also, I haven't looked at them, so those were better than expected. Is that better or worse, actually?
I can't remember.
Or not filled. They have 8 million. So the actual one was 8.04 million, and jobs that are not filled, and the expectation was 7.65. So that number indicates actually a stronger job market. So you'll sometimes see, not always, but sometimes there's a correlation between how the jolt job openings are and how the non-farm payrolls are. So by that logic, we maybe could expect a little bit a higher number than 140,000. But then again, we've seen just in the recent past how these numbers can be revised to like totally different numbers. We just had,
I'm wondering
like a little bit of a scandal actually recently.
Yeah.
You remember which like put a little bit of turmoil on the markets. I also don't really know this time what to make of it, honestly speaking. Like, because if we get a worse number than expected, of course, on the one hand, people will think like, oh yeah, the recession is coming. On the other hand, this is going to put oil into the fire of the Fed further cutting rates at the next meeting to maybe 4.5% then, or 4.75%. And so I really am nosy on this one, how the first reaction is going to be. For myself, I'm probably going to wait at the sidelines because I really, really have a hard time imagining how the reaction of the market would be. Normally, of course, in an environment where you're not thinking so much about soon to come rate cuts, you would always assume a better number of non-farm payrolls would indicate a risk on move. So stocks rising, crypto rising, treasury bonds falling, for example. But I'm really not sure about this one. It's going to be for sure interesting, especially in the combination with this is the Canadian dollar. I thought for a moment it's the US dollar index, because we've seen also from the US dollar itself quite interesting moves now. If I see like euro dollar, for example, has established itself quite nicely now over 110, which for a long time was like really the solid lid of a price move. I don't know how often we try to get over this area of between 109 and 110, and now we finally made it. Went all the way up to 112 actually. So this, what we are seeing right now, in terms of where we trading 110.50, no, not even 110.20 at the moment, around this area, all the way down to 110. This actually could establish itself, in my opinion, as a new baseline. That would fit very well in this risk-on scenario where you would in tendency also see a weaker dollar. So I'm thinking long-term, maybe euro dollar 115, 120, something like this. And yeah, as always, it kind of boils down to like one economic number being released once again. Yeah, I don't know about you guys. I mean, you can prove me wrong, please do so. For me, it's like one of those events, since I really don't know what to make of it. I want to sit, at least for my swing trading, not talking about my automatic systems, which I still want to touch base here later on. I'm going to sit this out on the sideline, except maybe we see like a very obvious move where we touch like an ATR level, get deflected by it, or acts as a area of resistance or support. Then I might jump into a quick trade there. But let's see later.
I think for me, EU is in the area of interest here. This is where I'm going to look for longs. I think
and it's also such a psychological important number, no? 110. It's like,
and you can clearly see that there's been a lot of reactions around this area. We can go to the weekly, put on the line chart, and we see that there's just historically a lot of volume around these areas right here. And I do think that, I mean, again, going back to my process of trading here, you can clearly see how, we had a very good reaction to this level here. I mean, I would probably maybe have longed here and been stopped out and missed that one, but it's the same idea here, where you come down into high time frame level, and then you break structure down here with a massive double bottom in the 4 hour. And right now, what I'm watching on EU is, if we have a candle just breaking out here, maybe closing it around these levels, then I will be looking for longs. Something like this. I think NFP might be the trigger that I'm looking for to enter this, but I'm probably going to enter the orders like probably 1 hour after the NFP event. NFP is at 4:30, so it's actually 30 minutes before the 4 hour candle closing. That's problematic, because I'm not sure I want to enter 30 minutes after, because what I've seen a lot of times is it takes about an hour for the market to really choose a direction. So I think 30 minutes is a bit too early. I would like to probably, and then the next 4 hour candle close is 7 in the evening, and then I'm thinking that's too close to the market's closing, So we'll see.
Yeah, especially since it's a Friday. No? We're not talking about crypto here.
Exactly.
Obviously, the forex market, stock markets are going to be closed on pause on the weekend. If I just quickly here Like, look here at the
It's one thing when we talk about the weekend price action. We got to think about what's going on in the Middle East and in Ukraine as well, and it's weekend. Like the dangers of having a gap is very real. Like imagine if I enter here, stops down here, and then maybe TP up here. What if I have a 4-hour candle close here at 7 in the evening, but then right before the market is closing, I'm trading down here, and then we get the news that Iran is attacking Israel over the weekend, and it gets the situation. Like we could easily have maybe we can have a big gap to the downside.
Yeah,
it's very possible to have
easy
quite a big
100
gap to the
pips,
downside.
200 pips. That's in a situation like this very, very possible.
And we're talking about 100 pip gap to the downside. 100 pip gap to the downside, that would be down here, which means my stop loss is going to be, I'm going to be filled with a loser that is 3 to 4 times bigger than what I planned, which is detrimental. So I'm actually thinking more and more about not holding trades over the weekend if they're too close to my stop loss, especially when you have macro. So I think it's a real danger of holding trades over the weekend.
It is. I agree with you. At least for Forex, obviously for crypto, not that dangerous because you still have a trading going on. For stocks, even more than for Forex, in my opinion. Because imagine you trading US stocks, and then I don't know, you buy Nvidia or whatever tonight, and when the weekend comes, you'll have to wait. Even on Monday, I mean, it's not starting at 12 a.m. like Forex trading on Monday, where you have this gap immediately. There's a lot of price action going on until, at least from a European standpoint, at in the afternoon, at what is that, like 2 or 3:30, the US stock exchange opens. I've seen that very often. I've actually had to endure this myself also back then during the Iraq war, the first one, and you are sitting there with sweaty palms, like just hoping for the best, especially like in 9/11. Oh my God, that was crazy back then, the weekend gaps we saw there. All right, so that quickly for Forex. One more thing I would like to point out here is, so we still have quite a way to go until the next interest rate decision in the USA. So next meeting is going to be the 7th of November. Interesting here at the moment, at least, is that around 68% of market participants are expecting interest rates to be unchanged. So between 450 and are going to expect a cut of 25 basis points. Currently, we are 475 to 5%. So 25. We have 32% expecting 50 basis rate cut, and you can be sure probably this picture is going to change today after the NFP. So if you want to have a look at it by the CME group, just type in the CME FedWatch tool on Google search, and then you'll come across this. This is very useful to kind of get an idea midterm. What is the market actually expecting in terms of interest rates? Because this gives you a better view also how probably the market is going to react to certain economic numbers. At least that is for me. I want to quickly touch base also on my multi-currency bot that is based on my MEI indicator, my market equilibrium indicator. As you guys know, I set up an automatic trading strategy for this one, which has been trading, was busy, very busy trading for a month now. Started out very, very good, saw some great results, but you can see here since like around the 19th, 20th of September, this one has been also struggling a bit. We saw a little bit of drawdown, which was not severe. Luckily, my risk management has proven to be quite good for this trading strategy. But you can see by the equity curve here that it has been struggling a little bit. And this is very typical. This is why I said earlier, when you are trading a mechanical system, and in this version, it is a mechanical system, because this is simply like, if we have a look here, for example, at PopCat, at every buy signal, it's going to open a buy position, and it's going to switch around to short for every sell signal. So pretty straightforward. That one has been working out very well, in my opinion. We made 5.95% so far in roughly a month. So, I mean, if you tell me, Dirk, your overall portfolio performance, including everything, next month is going to be 6%, I'm going to say, well, thank you, I'm happy about this. See you next month. This is an extremely good performance, especially in relationship to the drawdown. But you can see here also that static trading systems like this struggle to adapt when the market structure itself is changing. And we've seen, especially in altcoins, the market structure on some days changing very, very quickly. Like, let's have a look here. PopCut again, there was like, it was crazy sometimes. Of course, in hindsight now, that looks like, this is like a prolonged sideways range. But the sideways range went from 0.9 to 107. And from 107 to 0 back to 0.19, this was sometimes within like 6 hours. So this is a little bit crazy. I'm quite happy how the bot itself, how my indicator reacted to this. So overall, it's performing very well. It shows, however, and this is what I want to implement here also in the future, a couple of more filters, like not to trade every signal, but to take into account what I've been telling you guys to take into account, like where are levels, higher time frame levels of support and resistance. If you see that, like, for example, a sell signal like this one, which appears directly at what was back then a zone of resistance, makes, of course, much more sense than, let's zoom out here a little bit, than which was a bad signal. They were all like this one, for example. I wouldn't have fancied this one very well because it was somewhere between like in no man's land. So that's something manually I wouldn't have traded, would have worked out obviously here. But yeah, in the future, I want to implement a filter. However, I want to let this bot for now continue to run just to see, like, the indicator by itself. If you just put it on autopilot, how can it perform? And I mean, we have now with 354 trades being done, really statistical significant data here also, and I mean, if you look at the last month, I think we've seen like every market structure possible, like including insane volatility, especially in altcoins, also in Bitcoin, obviously, to the upside and downside. So for me, this is pretty robust, what we're seeing right now. If we are continuing to see the next month, I normally would expect maybe a performance of 1% or 2% maximum per month. I'm very happy with this system. If you're interested in this, I actually made a video about how to create an automated system like this. You can check it out on my channel. And if you are interested in trading with my market equilibrium indicator by itself, you'll find a discount code in the description of this live stream where you get 75% off for the first month. So you can try it out and see if it's suitable for you. How's been trading for you this last month, by the way? We haven't talked about
trading
that.
Has been good. I must say though, I think quite impressed with the results here. I like. I mean, it's a 6. I mean, that's a 5%, almost 5% in a month.
Yeah, it was 6% in a month. Yeah, we ended like like technically 2 days longer than a month now. Because the last day was good, so it's about 5% per month. Which still is like that's why I said if you have a trading system, especially an automatic one, that delivers something like this every month, it's like, be happy about it. Especially
I'm actually
this was a month not going up. Just you had like wild swings to the upside. You had like a real tester of the mechanics to handle a drawdown. Also, so this for me is happy. It's all about, in the first couple of months, about having those extremes to the left and side of a standard deviation bell curve, where a system is really put to its test. Yeah.
How long has this been running? And then before this, how long have you been like testing it?
It's been running live now since 1st of September.
Right. Okay. So I think I would definitely be interested in investing some in this when maybe we have like 3 or 4 months,
Yeah, because exactly. That's what we should see, like 3 to 4 months of data, around 1,000 trades.
For me, even, I mean, 2% per month. Yeah. I mean, honestly, like anything that's profitable, and anything
that's more
that's
yield
profitable
than your bank account, your saving account. No,
Yeah.
it's valid, and this is also one of the reasons why I like to share this. Also, when there's a period of drawdown, to show like what is a realistic expectation, and the realistic expectation is not I want to make 50 or 100 or 1,000% every month, because the influencers out there show, yeah, I started with 1,000, now I'm a millionaire. I know a lot of beginner traders have that expectation, and to be fair, I had this too when I started this like 25 years ago. Back then with internet stocks, I just throw in a couple of €100 or D-marks back then, and I'm going to be rich within a year or a month or whatever. And you have to take into account, if you look at the real professional big players out there, which are the hedge funds. The top 50 hedge funds of this world, on average, over the course of the last 15 years, have made 15% of an annualized return every year. 15%, not 50, 15%. So if you come close to this with a good risk management, of course, you cannot have like plus 15% and in between you were at minus 95%. And this is not a good risk management. But if you land there with good risk management, with not so much drawdown at plus 15%, you are already in the top 1%, like the elite of the elite. So please have that in the back of your mind when you're thinking about something like, I want to make a 50%, or I have this 500 euros or dollars here that I want to trade with a little bit. It's more being gambling, especially if you use a lot of leverage. For this system, I hardly use any leverage. So every trade you see here of those 354 trades was an investment of $250 on a 10K account. Of course, sometimes I have like 20 positions open or 25 or 30 positions, but still, even to reach a one-to-one leverage ratio, I would need to have, 40 positions open. Then I would have invested 10K. And you can see here, even with like an investment under not using one-to-one leverage, even you sometimes have those drawdowns where you get hit by, I think it was like 3 or 4% of drawdown we saw then one day. Where the prices just went crazy and my market equilibrium indicator just needed time to adjust again and to readjust the positioning as well. And imagine you trade this with 10 leverage and you suddenly see like 30, 40% down. And to deal with that mentally is like on a totally different level than dealing with 3 or 4% drawdown. Then I can assure you're going to make bad decisions with 30 or 40% drawdown.
We talked about the hedge fund, and I'm definitely going to look up what the risk adjusted returns are for this 15%, because 15%, like a lot of people might say, 15% is not a lot in a year, and I would tend to agree that if it depends on how you're trading and how much you're risking. 15% can be quite a lot on a yearly basis. And it might also be not a lot, depending on how much you're risking and what your risk-adjusted returns are. So, I mean, if your drawdown is 2% and you're making 15%, that's insane. Like that's crazy. If you get a drawdown of 50% and you make 15, that's very bad. Well, not very bad, but it's still
things are also different if you manage like, let's say, $1 billion US. Or you manage your own account with 10K or 100K or even $1 million. I think making 15% on 100 million or $1 billion is more difficult than making it on 10K, because you need to diversify. You cannot just trade, like, for example, this strategy with $100 million. That's impossible, because we are in altcoin trading here. You're going to move the markets very much. Apart that probably you don't want to trust a crypto exchange with 100 million in cash. Although probably they would crown you their all-time favorite client before disappearing with your money. And
so I actually looked this up. I actually looked this up. So there's different ways to measure risk-adjusted returns. You have I think the Sharpe ratio is one of the most used ones. So and anything above 1 on the Sharpe ratio is good, and above 2 is very, very good. And then some people have above 3, but that's just legendary, right? If you're above 3, that's insane. So we can look at Ray Dalio has at 1.6 over a long period. 1.6 very good.
That is insanely good, really. Yeah.
But listen to this. Jim Simmons, right? Simmons. Has 5. That's insane.
But it's yeah. Sorry, continue.
He's the only one who ever had that high. Like, and he has analyzed returns of 66% on average,
Yeah,
with a
that's crazy.
5.0. And of course, that hedge fund, Renaissance Technologies, used a algorithmic trading system,
Yeah,
basically. Very,
but
very, very, very
you
good.
also have to be careful, of course, if you compare yourself to something like this. It's like you. I just told Jonathan before the stream that I'm a little bit into sim racing, but that I'm very bad at it. So that would be like me comparing myself to Max Verstappen or Michael Schumacher or something like this. They are
Right, yeah.
like not only by the years of experience, but also by their talent, of course, on a different level. So maybe don't compare yourself with a top of a top. Compare yourself with the above average, the
Yeah, but you
75% or something like this.
it's interesting to look at this, though, because you look at Berkshire Hathaway, which is Warren Buffett. He has about 0.7, and then George Soros has about 1. So it's like, that's realistic. That's a normal Sharpe ratio, right? So that's realistic, right? Yeah, it's so for a typical hedge fund, you could say that you have between 0.5 and 1 on the Sharpe ratio. Actually, you know what? I wonder what my Sharpe ratio is. Where
I
can I
cannot
see
see it
that?
here, but I would have to manually calculate it. For me, the metric I'm always looking here is the profit factor. So that obviously needs to
Right.
be above 1, because if you're below 1, like we see for the last week's performance, 0.99, that means you've lost money. Profit factor is just gross profit divided by gross loss. The system, when I started it, went all the way up to 5.6 or something. But normally you will settle, especially with those intraday systems, you'll settle somewhere between 1 and 1.5. So 1.37 at the moment, that's just in the sweet spot for what you can expect from really intraday trading. And this is kind of, I think this is intraday trading, because, I mean, it did like 350 trades plus within 30 days. So you basically have 10 trades per day.
So I'm wondering where I can find the Sharpe ratio statistics, because I'm using EdgeBonk.
Yeah, for
And
sure you can find it.
I should be able to have it in. Now you can't see EdgeBonk here; you can only see TradingView. But I will copy paste it. So I think it's it should be. But efficiency, I can't find that right now. But
so maybe that's a homework for us for our next live stream.
Yeah,
next week we find out what our Sharpe ratio currently is on the for the trading strategies that we are sharing here.
Yeah, I have to look that up, definitely. It's interesting.
I'm very sure you
So
can.
yeah, we have a couple of potential setups on EU. I think the euro looks ready for EU looks ready for a potential reversal, as well as Euro CAD. We do have a good good move up here. Not really exactly what I want to see. So Euro CAD looks somewhat bullish, as well as Euro NCD. Euro NCD has come down and kind of about to potentially break market structure here. So I do like what I'm seeing on Euro CAD, and the trade I'm going to take is probably going to be on Euro USD after the NFP today, if I get confirmation. So basically, a strong 4-hour candle to the upside would confirm this as a trade for me.
Are you going to?
I think
you said you're going to wait, no? Also, like preferably until the 4-hour candle is closed, no?
Yeah, I mean, I don't know. Because I'm a bit uncertain, I'm probably not going to take a trade today. Because if the 4-hour candle is going to close 30 minutes after the news, and a lot of times you see that within the hour you can have a first initial move, and I'm not talking about the lower time frames, but like if you're looking at the 4-hour or the 1 hour, you have an initial move, and it might take about 30 minutes for the market to absorb the price action. So you have a move the first 30 minutes, and that can easily retrace in the next 30 minutes. So if I enter on the first move, and then yeah, so it's I think I would like to have at least 1 hour of price action being printed after I enter the trade, which it might be possible because I have a 4-hour candle close, and then if price hovers around that 4-hour candle close 1 hour after NFP, then I might take the trade anyway. But we'll see. It depends on what price action does.
I mean, who knows? Maybe it's going to be like, exactly the number that was expected, and then we kind of have 5 minutes of price action, and then things go back to normal. I don't think this, and I think also the general message is here what you just said. I feel uncertain what to do, so I don't do anything. I think that's always a good mantra to have as a trader. Like, if you don't know what to do at the moment, don't do anything. Remember, every trade is a business decision. If you do something just because you want to do something, I'm not even going to say because you have a feeling. A feeling can also be a trading strategy. I know actually traders who just trade by feelings and are successful with it, but usually they have a long years of experience until they reach that level from viewing the charts. And so if you don't know what to do, just don't do anything. The beauty of the markets is that new chances present themselves every day, almost every day, depending on the time frame you are in. Yeah, I think that wraps it up a bit for today. We've been streaming for an hour now. Thanks again for doing this with me, Jonathan. You guys check out in the comments. Also, you'll find a link to Jonathan's YouTube channel, to his Twitter, of course. Make sure to give him a like and subscribe to his channels. Also, check out his RLZ Slingshot indicator. You'll find a link also to where you can purchase this. It's not just the indicator. There's a whole educational package with super much content coming here. I always like to say it's not an indicator, it's a trading suite, in my opinion, that can help you to really identify the times where there are potential trading setups and not, navigate the markets blindly, which is especially important when you're a beginner. All right. Then we're going to see each other latest next week again. Let's see how the markets have behaved then, or if we are talking still about the same setup in Bitcoin once again with a reload zone there. And we are going. I'm seeing a comment here. Trading chats, like to get involved into trading chats. You can, I know you have a Discord channel, I have a Telegram channel. Make sure to join those. There is really trading talk always going on. I'm not sure about you. I share a lot of my personal trades there, why I do them, why they succeeded, why they didn't succeed, of course, as well, which is as important. Feel free to join the discussion there. Until we see each other again, everybody, always remember to use the stop loss and